Good morning, Scott.
Hey Karen, how are you?
I am very well, thanks. Yourself?
It's just like we practice.
I know, I love it. Works
We,
out good.
I'm trying to think of how did we practice this?
Well, we'll get rolling here pretty quickly. I like to start about spot on at 8 o'clock. So those of you that are joining, you've got about 30 more seconds to grab a warm cup of coffee, and then we'll get rolling.
I'm good.
All right. Scott, get you to figure out how to get your phone turned off so it doesn't ring on you?
I just turned it back on. I'm glad you reminded me. There, we're off. Make sure all of them are off.
I know, right?
Okay.
So today we are just a couple seconds before 8. So those of you that are already on the webinar, if you've got any immediate questions, I'm going to have you start funneling your questions into Q&A. One of the things that Scott promised is that he's more of a question answer person. So anything that you are thinking that you are interested in learning a little bit more about as it pertains to an accounting perspective. And the truth of the matter is, Scott, just because of all the work that you've been doing to make sure that you can account for it with your clients as well as for your own business, there's a lot that you know about the programs that are coming through the federal government and their net impact on organizations. So with that, we're at the 8 o'clock hour. We are grateful that all of you could join us. Good morning and welcome. You are joining us for the 6th of a series of 7 web seminars presented in partnership with Dakota County CDA and Chamber Partners. Today's topic, financials, aka Q&A with CPA. Thank you, Scott. With the focus is really on what is the impact of the PPP program as well as the EIDL loan program on our businesses. These same topics also apply to the state-funded programs, and Scott will be able to talk about that in a little bit. Few housekeeping items. Just as if you've participated in the past, all participants are muted. Please funnel as many questions as you possibly can through the Q&A feature. Scott's really good and has lots to share, and at the same time, it's always a little bit more interesting, a little bit more useful for each of you if you get your questions answered. Recordings of the seminar will be posted on partner websites, including cities. So if you've got any questions about that afterwards, please don't hesitate to reach out. My name is Karen Schaffhausen. I'm the Dakota County Open to Business Advisor. We are truly glad you're here. In these unprecedented times, we've got lots of questions. Scott today is here to answer all things related to your financials. And with that, Scott, I'm going to turn it over to you. Thank you so much for joining us.
Well, hi taxpayers. We have completed the first technological miracle, and we've got the audio and visual working. I sure hope you can. It sounds good. For some of you, it's hello Rangoon. I think we just about got everybody covered. Karen has really put together a nice list of speakers along the way here. Ethan Hellier from the U.S. Chamber did a great job opening up the series, and then Bruce Gulbrish from Merchants Bank did a great job explaining how the bank programs are working, and that has been really good. Matt Scott covered a lot of great topics for the 2 sessions that he had worked with, and did a wonderful job bringing you the programs. Carrie Swatala did a wonderful job talking about how to work online. I'm learning more about online than I ever wanted to know, and I'm afraid it's here to stay. So all those things are good. Let's move forward. I am Scott Kadrlik, CPA. I manage a CPA firm at Eden Prairie. There's about 17 of us. I also carry a personal financial specialist designation from the American Institute of CPAs. I've been in public accounting for 40 years now, so one of these days I'm going to figure it out. I am also the second funniest accountant in America. I've had the opportunity to work with Louis Anderson, Jimmy Walker, Judy Tenuta, all the legends of Minnesota comedy, Scott Hansen and the group. So you've had great speakers all along. This is where everything falls apart, folks. And so we are going to take you through you can keep moving forward. If you don't believe I'm a comedian, I was in the Twin City Business Magazine back in 2013. They did a nice feature article about my 2 careers. And this month I was actually in Financial Advisor Magazine as a feature article. This article says, yes, Benny, I suppose being an accountant is kind of like being a superhero, and that's how we feel. But we've been inundated with all kinds of changes here in the past month, and so we're going to talk a little bit about the CARES Act and a number of different pieces of it. Our goal here, here's me with all my superhero friends. We've saved a young boy. Little Timmy was caught in the well, and we got him out, and all is wonderful. So I have to tell you that you know, the social distancing issues that exist out there don't really apply to accountants, because we've been practicing social distancing all our lives, and so it's nothing new for us. And I'm glad to be part of the seminar today. Let's talk about what you've seen in the last basically month. There's only been about 1,000 tax bills that have been thrown out in front of you, and we've done a nice job with the previous speakers talking about each of the pieces that you need to think about. The question is, where do we go from here, and what do we need to worry about? What do we need to think about? What applies to me and my business versus not worrying about things that are, you know, for other companies. First of all, let's talk about the tax deadlines. The federal government has moved to July 15th, the due date for individuals, corporations, C corporations, partnership tax returns, trusts. And so anything that was due by April 15th is now due July 15th. That means not only the tax filing, but also the tax payments. So any tax payments that you have for 2019 that would be paid with your tax return, individual or business, are due July 15th. They just released on Thursday that any estimated tax payments for 2020 that were due April 15th are now due July 15th. And so if you were an individual that normally pays estimated tax payments and the first payment was due April 15th, you now have until July 15th to make that first quarter estimated payment, as well as the second quarter payment, which will be due on June 15th. So any taxes that are owed for 2019 are due July 15th. Any estimated tax payments for 2020 are now due July 15th. So the April 15th, the June 15th estimated tax payment for 2020 are due on July 15th also. That is a little bit of a lumping of a lot of taxes at one point, but you know, you're just gonna have to plan for it, and we basically have 3 months to do that. The only other issue that relates there, Minnesota has accepted the filing date for individual tax returns and business tax returns as July 15th. They're also accepting payments for individuals and businesses that are due April 15th for the 2019 year are also due July 15th. Minnesota has not yet conformed with the federal rule regarding estimated payments for 2020. I expect that they will. They have not done so as of yet. And so it is important to think about anything that you would have due on April 15th to the state of Minnesota and decide, do I want to pay it now or wait till July with the hope that the state of Minnesota will remove any penalties for not paying it on April 15th. They've done this in the past. I'm expecting they would. They just didn't get it cleared before they left session. The Minnesota Society of CPAs has petitioned the governor to push that deadline also to July 15th. I'm hoping that is going to happen. The problem is it's probably not going to happen until after the April 15th due date, and so you'll have to make a decision or work with your financial or tax advisor as to whether you should be paying anything on April 15th for the 2020 tax return. But again, Minnesota balance due for 2019 is also due July 15th. Nothing to worry about there. There's a lot in the tax deadlines, but pretty much everything's been pushed off. Some of the other things that came in the 2020 CARES Act were there's grants, loans, advanced credits. Everybody, I've been on TV a couple times already about the advanced credit issues. They just started putting out the $1,200 checks this morning, and you may get one, you may not get one. Recognize that this is just an advance payment on a credit against your 2020 taxes. So if you didn't receive a $1,200 check and then ultimately do qualify for the credit, you'll be able to reduce your 2020 taxes by the $1,200. So everybody is going to get a $1,200 credit against their 2020 taxes if they applied. Their income was low enough in 2018 and 19 to get you that advance credit. If you did not receive the advance credit, you may still be able to reduce your federal taxes for 2020. It all depends on what your income was. And the situations that occur that way is if you didn't file your tax returns yet for 2018 and 19, you will not receive an advance credit payment at this point. There are refunds, there's deferrals, and then there's unemployment. And I think everybody has talked, extensively on the unemployment issues. I think if you are not working today, or if your income has been cut back dramatically, whether it's wage income or now self-employment income, you should be applying at the state of Minnesota for unemployment. Minnesota is covering and handling the unemployment tax payouts, or the unemployment insurance payouts to individuals who are not working. The federal government has offered $600 per week to individuals who are unemployed, both from wage income as well as unemployed from self-employment income. That is all monitored and handled through the state of Minnesota Unemployment Division. So if you have not yet applied because you are self-employed, you should be looking at applying now, because you should be entitled to the $600 check if you can demonstrate that there's been a drop in your self-employment income. We talk about the PPP program, the Paycheck Protection Program, as well as the EIDL program, EIDL, which is the Economic Injury Disaster Loan Program. We're going to talk a little bit about both of those, or actually extensively about both of those, because that's where all the questions lie. There are tons and tons of questions on these. Hopefully we can answer a bunch of them today, and I think our slides today will be very helpful in getting that done. The Family First Act, there's two pieces to that, the FICA credit as well as the FICA deferral. The FICA credit is basically a refundable credit if you continue to pay employees while they were at home because of the coronavirus. So either the office was infected, or the individual and their family was infected, and they were forced to stay home and not work or perform services. You continue to pay them their salary. You can actually take a credit, a refundable credit of the FICA taxes paid on those individuals. The FICA deferral is a situation where employers and also self-employed people can defer the payment of FICA taxes that they owe during the rest of 2020. So I've got employees, and I'm paying their wage, we're withholding FICA. I'm also paying a matching piece as an employer in FICA. I really have through the end of this year to defer my share of that FICA payment. So if I owe, for instance, over the course of the year, $100,000 in FICA, I may ask for a deferral, and I would defer that payment of that FICA tax until 2021 and 2022. So what happens is during the rest of the year, we calculate how much FICA we're going to defer. And let's just say for this example, it's $100,000. I would pay half of that in 2021 by December 31st, and the other half by December 31st of 2022. So 50% gets paid next year, the other 50% 2 years from now. And so it gives me an opportunity to defer payment of these taxes that I've now owed because I've continued to employ people during this time of COVID.
So Scott, to that question, one of the things that's coming up is what happens with these deferrals if I end up doing more layoffs? Does that deflect? Does that change how these deferrals are applied? And also from an accounting perspective, if I'm a smaller operation and I only use my accountant for doing taxes, how do I manage that on my books?
If you are paying payroll, you're filing Form 941, and on 941, the third quarter, or excuse me, the second quarter form, which will be due July 31st, will have the information on it in order to calculate the deferral amount as well as the payment. And the same thing as we file the 941s for the third and fourth quarter of 2020. So there will be, in the forms, it will be there. Now, the question really is more, should I or should I not defer this payroll tax? And you know, part of it depends on what you see for the future, as well as will you be able to pay those dollars back? Because again, these are dollars that you as the employer owe to the federal government. Do you want to defer them and ultimately push that payment out to 2021, 2022? That's a big commitment that you're going to have to take a look at, work with your financial advisor, work with your CPA to figure out, is this a good thing or a bad thing for my business? If there's a lot of uncertainty and I don't know that I'm going to be able to make those payments in the future, but I can pay them today because I'm paying employees and still generating income, the deferral may or may not be a good thing for your business. So you really want to look at it deeply. And for self-employed individuals, if I'm self-employed, I pay self-employment tax, which is FICA taxes for a self-employed person, which ends up being about 15.3% of my net self-employment income. If I owe $15,000 in self-employment tax when I file my 2020 individual income tax return, I can defer that payment to 2021 and 2022. So it doesn't just apply to employers that have employees. It also applies to self-employed individuals who are filing a Schedule C self-employment tax return on their individual tax return. They can actually defer into 2021, 2022, the FICA or self-employment tax that they pay as a self-employed individual.
Thank you.
We can go to the next slide. So let's talk about the PPP loan. The Paycheck Protection Program loan is you've seen a bunch of articles on it. Like I say, everybody has talked about it very nicely. Well, Bruce and Matt have covered it extensively. I think they've done a nice job. But let's talk about, what do we do now? If you have not yet applied for the PPP loan, I'd recommend that you take a hard look and get this application in place. Some employers are saying, well, I don't need it. Things are going fine with my business. I don't need that. But what we don't know is what's going to happen later on this fall when the economy, you know, even though it starts back up, it could be slow and collections could be slow. Do I need the money? Do I not need the money? It becomes a very big question, but that's the future, and the crystal ball is a little foggy right now. So if you have not applied for the PPP loan, I would strongly recommend you take a look at it and consider getting together with your bank and doing so. I know that the big banks have kind of balked at this, that they've already taken in too many applications. If you're working with good local banks, they have been more than happy to help out along the way. And I definitely want you to meet with your banker, talk to them. You probably can't meet with them, but talk to the banker and get an application together. The application isn't very hard to fill out. Your financial, your CPA or your banker can help you gather up the pieces of the puzzle in order to apply for this. But basically what the bank is looking for is your 941 reports for the quarterly payroll tax forms for your employees for last year, for 2019. So you would add up the gross wages for 4 quarters of 2019, add to that the health insurance benefits that you provide to the employees, plus any retirement plan benefits that you provide to the employees. Those are your total payroll costs. You take that total, no person can receive more than $100,000 in payroll. You would calculate 2.5 times the average monthly payroll costs and determine what your potential loan amount is. You'll send that information to the bank. The bank does a little bit of confirmation on it, but they don't do a lot of digging. They basically have the reports they need when you send them the 941 reports to answer those questions. The bank then passes that loan off for approval through the SBA, and then the bank will get it funded. Now, the question is, what happens when the bank gets the money back and funds your loan. You've got 8 weeks, because the biggest part of this loan is the forgiveness piece, and that's what everybody wants. Everybody wants forgiveness. I go home every day and ask for forgiveness, but here everybody wants forgiveness of their loans. And in order to qualify for forgiveness of the loan, once the loan is funded, you've got 8 weeks to spend those dollars on payroll costs, rent, a business mortgage. For instance, let's say you own your building, you would be paying mortgages and utilities on that building. Those costs are added up and determined to reduce or ask for forgiveness against the loan you receive. So let's say you are able to put together a loan application, and the bank says you can have $200,000. That's your loan amount. Okay. Once the loan is funded, you've got 8 weeks to spend those dollars on payroll costs, rent, mortgage, and utilities. Any amounts not expended. So let's say during that time period, you can only hire enough employees and pay rent, and it comes to $150,000. Well, the SBA will forgive $150,000 of your $200,000 loan, and that leaves you with a $50,000 loan still payable to the bank with a 1% interest, payable over 2 years, and the first payment won't start for 6 months. So the forgiveness piece is pretty important, but it's going to require some good records, because to get the forgiveness, you're going to have to prove payroll costs incurred. You'll need a copy of a lease agreement that was in existence prior to February of 2020. You'll need to show utilities that you were on a program prior to February of 2020. Any mortgage payments, all of those. You're going to have to demonstrate these costs are incurred during that 8-week period following the funding of the loan.
Scott,
Go ahead.
I've got a question for you.
Sure.
For the mortgage payments, there's been a little bit of information on this, and Mary just asked a question. Can we pay the full mortgage payment or interest only? Because on the SBA information that's been pushed out, it says interest only, but I would anticipate the full mortgage could be paid, correct?
I would believe so, yes. Yes,
Okay.
It does. Everything I've seen, it said mortgage payment. So yeah. And and part of, just so everybody knows, everything came out so fast that the SBA is kind of reeling with questions. They are sending out frequently asked questions or answers to frequently asked questions almost every other day. And so every day we get a couple of new questions answered by the SBA, because there's certain things that, when someone says, well, it's mortgage, well, what does that mean for everybody? And making sure that we can answer that properly, the SBA's got to give us some guidance. And so on a daily basis, we're getting answers from the SBA. And so something I tell you right now is timestamped to right now, because it could change tomorrow, and hopefully it doesn't change dramatically the wrong way. But as of today, we're looking at the mortgage payments being subtracted against that.
So I've got another question for you, if you're ready.
Yep.
So this is actually a great question a lot of people ask, because they want to know if they can defer acceptance of the PPP loan and keep their staff on unemployment with trying to manage and mitigate we don't know when we're going to open.
Yeah, that is the biggest problem and the biggest concern right now. Your 8 weeks starts the day the loan is funded. Your application goes into the bank sends it off to the SBA. The SBA sends the money. The bank has 10 days to sign that loan. If that loan is not signed within 10 days, the money goes back to the SBA, and you are out of your opportunity to use that PPP loan. I don't know that you can go back and apply again later, but right now our understanding is that you've got 10 days from the day that the bank has the loan acceptance from the SBA to sign off on that document, and that starts your 8-week period running. Now, I'm a restaurant that isn't going to open before May 4th. What do I do? How do I prepare for this? One of the things that we're recommending is that you hold off applying to your bank, because it is going to take a little bit of time with the bank before that application can be sent to the SBA and funded. But I know that there are some loans that have already been funded from the early applications here, and early, I mean, only 10 days ago, for the PPP loan. And so the loans are being funded. The problem is one of them is a spa, and the spa can't open until May 4th. And so during this next 3 or 4 week period, they're not open. And how do we apply our costs against that? Well, we're probably still paying rent during that time period, and we probably have some utility costs, but payroll costs can still be paid. The owner can still receive a paycheck if that's the only person working, as well as any employees that you have to bring on to get ready for reopening would be part of that cost. But if you have not yet applied for the PPP loan, you will, again, not have to worry about funding it or start using your 8 week period until that loan is funded. The only problem with waiting is that the question is there going to be money there, you know, come June in the PPP loan program? I know the Treasury, the Secretary of the Treasury, Meuwissen, has said that if we need more money, we're going to go back and get it. I know the president has offered another $250 billion towards this program. So they know that some employers are waiting to apply, and hopefully we'll still get it funded. I'm not saying that they run out of money yet. You just have to look at when is my first 8 weeks once that loan is approved, and will I be able to apply enough payroll costs? Now, the worst case is, hey, I can't use up all of my loan. I got a $200,000 loan. I can only incur $100,000 of payroll costs during that 8 week period. What do I do? Well, I end up with just a $100,000 loan because I can only forgive half of it, and I owe it back in 2 years with 1% interest. If I don't need the money, I just pay back the loan. There's no prepayment penalty. There's no issues there. There's no loan origination fee. There's nothing that is negative in this loan process. I would just pay back the loan with any monies I don't need, or like I say, you've got 2 years to pay it back with a 1% interest. I don't think you can get a better deal out there right now.
Scott, one of the questions that I've been receiving is, are these loans on our tax returns considered income? So how are they actually going to account for this?
The loan is just that. Loans are never income to you. So I get a $200,000 loan. I put it on my books as a liability. When I get forgiveness, that forgiveness is not going to be taxable. So there's going to be a difference in your book and tax income. But at the end of the day, if the SBA forgives $150,000 of my $200,000 loan, I will reduce my loan on my books but not pick it up as taxable income. So it is not income. The forgiveness of the loan is not income. The payback of the loan is not deductible, but you didn't have to pick up the original loan either. So loans are never taxable income. The payback of the loan is not a deduction. It is actually a liability of the books.
That actually, a lot of times people are not sure where that lands, but that usually ends up on the balance sheet, correct?
That is correct, yes. Yep.
Have to throw that little accounting terminology in there.
Thanks for your accounting help.
So one question about the FICA, is that one of the questions is employee retention credit. Is that the same? So is the FICA mentioned earlier the same as the employee retention credit?
It's really two pieces there. The FICA credit is the FICA that you withhold from the employee's pay becomes a credit, a refundable credit. So basically, I don't have to pay the amounts that I would normally pay on those FICA dollars. So I calculate it, and then I go to the my 941 report and ask for a credit or a refund of those dollars that I paid when the employee was working, or excuse me, when the employee was being paid and not working because of the COVID-19.
Cool.
So it is a credit. It is a refundable credit. It is done on your 941 payroll tax form. It is different than the deferral amount. The deferral amount is the employer's FICA cost, the portion I have to match, that I'm asking to pay back in 2 years.
And the PPP loan and receive of that, there's questions about how does this funnel into that? Yeah,
if I am deferring FICA, I have to, I believe, offset my PPP loan for that. And I cannot take the credit and PPP loan during that same time period. So I just have to, they kind of work together and apart. So you just got to make sure that if you are taking the credit, you're also not using the same wages for the PPP loan debt forgiveness calculation that's going to occur. The debt forgiveness calculation is going to occur after the 8-week period and probably after June 30th. So as on June 30th, you calculate the number of employees that you have and you compare that to what you had in February, and your loan amount is going to be forgiven or forgivable up to the extent that you have the same or similar number of employees at the end of June 30th. So if you look at the calculation, it basically says, how many employees did you have in February of 2020? And so let's say I had 10. Now at the end of June, I only have 8 employees. Well, I've only got 80% of my staff at that point. That means I can only forgive 80% of my loan. So if I've got a $200,000 loan, I can only forgive $160,000. And then the next calculation is, how much did I actually spend during that 8-week period? If it's less than 160,000, I can only forgive up to that number. If it's more than 160,000, I would be able to forgive 160,000 of my $200,000 loan. I know I'm throwing some numbers out there, but each employer should be looking with their CPA to figure out exactly how both the use of the money during the 8-week period, as well as the number of employees that I have today versus what I had in February.
Well, believe it or not, Scott, we are actually at the 8:30 hour. And I just wanted to see, have we kind of covered this a little bit? I believe we have already, correct?
PPP loan. Let's talk, well, I'll stay as long as anybody wants to stay.
So just for everybody else, just to be respectful of your time, I did want to let you know that it's 8:30. Scott, if you're willing, just because I think some of these questions, plus we know that it's going to be recorded and put on both city and chamber websites, if you're willing to kind of continue to kind of funnel some Q&A, I think these are important details that a lot of people are trying to figure out. How do I navigate some of these little nuances? So if you're willing to kind of continue, and we'll finish out. And
Absolutely.
for those of you that need to step off, I certainly respect your time, and we're grateful that you had a chance to join us. And with that, Scott, I'm going to let you go on with your next slide.
Why don't you go back a slide, actually, because this is one of the examples that we're going to run into a lot. And then the question is, do I go get the PPP loan?
Right.
What is my situation? I'm a self-employed individual. Okay, I'm a realtor, and so for self-employed individuals, my payroll costs are my Form 1099 that I received. Sorry, I got a leg cramp.
We've all been there. That's all right.
So my payroll costs are my Form 1099 I receive. I'm a self-employed individual, and I use the 1099 or my net self-employment income on Schedule C. So you basically will go to your Schedule C for 2019 and say, okay, this is my net Schedule C income. This is the PPP loan that I will use. It's limited to $100,000. So to get a max loan for a self-employed individual who has no other employees, they would take that $100,000 max, because and assuming my self-employment income exceeds $100,000, I take that max loan, monthly average, times 2.5, I get to $20,833. That is the max amount of loan I can draw as a self-employed individual with no other employees. Once the loan is funded, I've got 8 weeks to spend that on myself: rent, mortgage, utilities, owner draw, any payroll for anybody I do hire.
So a question to that.
Say, what should I do? Should I go get the $20,000 loan? How much paperwork hassle do I got to go through to do that?
Right.
Again, if it'll help you get through this time period when nobody's visiting your business, or you're, like I say, if you're a realtor and no houses are selling right now, it'll get you through the summer months until people are back to work and operating again.
So I've got a great question here, and I've heard this a lot from the clients that I've been working with, is that 100% single owner of an LLC take draws as a result, my 941s are underreported. So what are the documents for self-employed individuals? Are they using the Schedule C? Which
Yeah, you're
components
going
do
to be
they
using
use?
Schedule C, and if you look at your individual tax return, the line is right there on Schedule 1, and net profit from small or self-employed business on Schedule C. And I've I've tried to compare it to a corporation where they have employment costs, payroll costs for payroll taxes and for wages and or benefits and health insurance that they pay, retirement plan. I'm not seeing any of that in the rulings that self-employed people can add in their health insurance costs as well as their um, uh, retirement plan contributions that they made for 2019 to qualify for a bigger loan. We're still waiting for some guidance from the SBA as to what they define when we get to that forgiveness period as payments for self-employment income. But again, the owner draw does qualify. The problem is you only get to take 2 8-week periods, or excuse me, you only get to take an 8-week period on $100,000. So you take $100,000 divided by 52 weeks times 8. That's the maximum that you can draw and apply against your $20,000 loan. If you do the calculation, you're going to find that that number is only about 15 grand. So how much as a self-employed person can I apply against my $20,000 loan? It looks like it's going to be a little over $15,000. So I'll end up paying back about $5,000 of that loan as a self-employed individual, unless I'm paying rent. If I'm working out of my house, I don't have any rent to add to that. And recognize that when you're looking for forgiveness on the loan, the owner draw and payroll costs that you have to be 75% of your payout. You can't use the more than 25% of the loan amount for rent, mortgage, utilities. It all has to be really for payroll. The whole idea behind this loan program is to put people back to work or keep people paid during this time period. And that's why they're looking for forgiveness during that 8-week period, the bulk of it going towards payroll and costs incurred for the employee. We can talk about the EIDL loan if you want to go to the next slide.
Totally.
So the next slide just talks about the Economic Injury Disaster Loan Program. This loan can be used for anything. And so you would actually go to the SBA directly and apply for this loan. This loan is based on your ability to pay it back. You will, if it's more than $200,000, have to provide some guarantees as an owner. This would be a normal SBA loan process. Going to take a little bit longer because they're going to want more financial information to determine your credit worthiness and spend the time putting that together. Now, part of this loan process is, again, there is no forgiveness on this portion of the loan. This is money given to you, paid back at 3 3/4% interest for a 30-year amortization. It's a great way of taking some dollars that you're going to be paying for operating costs over the next 9 months to a year and spreading it out over a 30-year payback to the SBA. You will never see an SBA loan at this rate and this amortization period. And so there's some really good things here if you need it for operations. Now it can be used for payroll and all the other costs, but at the end of the day, you would apply for this if you need to cover operation costs. The only other piece of as part of this EIDL loan is that there is a $10,000 grant, a forgivable grant that can be applied for with the application to the SBA. And so you'll go to the SBA, you fill out the information. Now the application for the EIDL loan is very simple. They ask for last year's gross receipts, information about you as the owners. They ask for a few questions regarding whether you have any felony arrests in the last 7 years. So there's some simple things in here that you just answer. And when you get to the bottom, there's a box that you check that says, I want to apply for the $10,000 immediate grant of the EIDL loan. And this amount is designed to pay you and cover during this time period until they can get the actual full idle loan put together. You don't have to apply for a full idle loan to get the grant. You just have to check the box. They will do some credit checking, but at the end of the day, that $10,000 grant, again, completely forgiven, is used to cover immediate operating costs. So
So
at the end
Scott,
of the day, go ahead.
one of the questions, and I have some information on this, but I'm curious to know if you have any additional information. Have you seen clients that are actually receiving anything from the idle loan yet, as far as either the grant
I haven't
or?
seen anybody getting the idle loan grant or the or an idle loan at this point. I've heard
Yeah.
a couple that have been approved, but no money yet.
And I'm in the same camp. And Justin, I realize you've been waiting a long time for that answer since you tucked it in at 8:04. I was watching. I wanted to make sure I had the question in the right spot, though. So, Justin, hopefully you're still with us. And we've kind of,
tomorrow, Justin.
I know exactly. But I'm kind of, Scott, in the same camp that you are in, that the SBA is actually recommending that people reapply and make sure that if they did the long form, that they do the short form, that they're really pushing on the $10,000 grant versus the longer, more extensive loan. And that we've seen people that have already received their PPP money, but that to date, that we haven't seen anybody with their idle loans or even the advance.
And they're working hard at the SBA. I mean,
Yeah.
they're really doing everything they can to get these dollars out to the taxpayers, but they're being a little careful too. They got to make sure that it's proper. If you apply for these loans and are fraudulent in your information, you will pay penalties and potentially go to jail as a result of it. And so there are people that will abuse this system. The reality is these programs apply to pretty much everybody out on the street right now, and each employer should be looking at them. Even if you say, hey, I don't need the money today. Right. Boy, I don't know where we're going to be in 6 months, but is it worth going after and at least applying for these and see what dollars are available? If it's forgivable, great, and we can incur those costs because we're paying employees and we're paying payroll costs, great, let's do it. If it isn't forgivable, if we got to pay it back, well, you got a 1% interest loan for 2 years. First payment's not for 6 months. Boy, it's hard to argue with that also. And then the idle grant, that is, hey, that'll take us through or get us through a couple of weeks or months of activity when we're still slow and waiting for businesses to open back up here in May. So, these programs are very extensive. And like I say, there's a lot of programs out there. If you're a veteran, there's programs through the state of Minnesota. Minnesota has offered a number of different things. And so there's definitely a program out there to help you. But talk to your CPA, talk to your advisor, call the SBA, call the state of Minnesota, see what you can find out, because there are a lot of opportunities here to help you through this time period so that we can get people back working again and back out on the streets and operating a good economy that we had going before this disaster occurred.
So we have come to the end of the discussion specifically. Scott, is there anything else that you wanted to leave people with? So they've got a little bit of downtime. So what should we be doing with our downtime if we're not really busy?
Well, this is a time to focus on your business. Let's see where we were. Let's get our accounting up to date. There's no reason that our bookkeeping is not caught up to date. We've had some free time. We definitely want to get the accounting for 2020 up to date, so we know if we do go to the bank and we need to borrow money, we've got good information both where we are today and where we were last year, and find good bookkeeping services or helpers there. Work with your CPA to get all your tax returns filed and up to date. I know that we've got a due date of July 15th. There's no reason to wait until then. CPAs want to be out in the summer too, just like everybody else. And so they're not really excited about having a July 15th due date. And, but they also don't want you to understand, or don't want you to think that, hey, we're going to drop everything and have you done tomorrow. We do have a little bit extra time. We are making sure that they're right. The problem with right now is that CPA firms are kind of scattered. The employees are working from home. I do come into the office, but we've only got, a couple of people coming into the office every day. Most of my employees are working out of their home. It makes it a little cumbersome to get data moved around, and tax returns take a little longer to prepare that way. But we are doing it, and by mid-May, I think we're going to be caught up to the point where all of our returns that we have in the door have been worked on and out to our clients. But yeah, don't wait till July 14th, because I guarantee you the accountants want to go to the parade on the July 4th just like everybody else, and they don't want to be working on tax returns.
Perfect. Well, everybody, we have come to the conclusion. Scott, thank you so much for sharing your time with us. Just really quickly.
Yes, they all laughed when he gave up that promising career in accounting to do stand-up. Well, no one's laughing now. Story of my life. So.
Scott, I certainly appreciate your sense of humor. Thank you very much for that.
Thanks, Karen.
So you have just finished the sixth of a series of specific small business seminars. The last one this coming Wednesday, April 15th, improving online performance. Those of you that have shifted from being mostly interaction with your customers face-to-face, here's how we can actually enhance that and start to hopefully drive a little bit of revenue and particularly plan for that sales projections. You did mention that, Scott, but that's on my radar as far as figuring out how to manage that and what it's looking for coming forward. These webinars are in partnership with the Dakota County CDA and their chamber partners. Thank you so much for participating. Open to Business, we are a free nonprofit service contracted by the counties to provide business consulting and gap financing. Again, the recording of this web seminar is shared with the county partners as well as the cities on their websites. Thank you for joining us. Have a great day. Scott, thanks again.
Thanks, Karen. Thanks, Ed Carney.